Good morning, everyone. This is the Vermont House Committee on Commerce and Economic Development. Again, Wednesday, February 12th, 2025 at 10:05 in the morning. Now we're back from a real short break to take another look at H-137, which is an act relating to regulation of insurance products and services. So we've asked Todd from the Attorney General's office to come in, and I think we had a robust discussion last week with DFR on crypto kiosks, and I think the question is, as for the AG's office, is what is their opinion if we were to outlaw them in the state of Vermont? Are we opening up a can of worms that's going to send us off to the courts, or if so, are we in good standing? Thank you for joining us this morning.
Thank you, Chair. So for the record, Todd Delos, Assistant Attorney General at the AG's office. Very quickly, the AG's position on crypto kiosks, virtual currency kiosks, is that this is an unregulated marketplace. It presents a tremendous risk to Vermonters. Of the fraud scams that we see every year, the largest number involve cryptocurrency. Our letter that we sent into DFR as part of their report that this committee received on January 15th lays out our concerns and also gives some further detail on the measures or the extent of fraud that we are aware of. Again, that's just what gets reported to us. We are certain that there is a larger number out there. And as long as this market remains largely unregulated, it's not gonna, we can't be in support of these kiosks being accessible. And we're certainly seeing an increase in that in the current climate. We're seeing scams involving or getting reports of scams involving Dogecoin coming from the new Department of Government Efficiency, people not being clear what's real, what's not real. So it is a ripe area for scam and fraud, and therefore injury to Vermonters. Crypto kiosks, as we lay out in the letter, are just another easier avenue. We have great partnerships with our other financial institutions, especially staffed financial institutions, that help prevent some of that measure of scam and fraud through human interaction, really helping to ensure that consumers are well informed before taking action. To the question at hand, I think an outright prohibition, without seeing specific statutory language and understanding exactly what the law would say when finally passed, I can't offer a definitive opinion on the legality. We see some risk potential in an outright ban. That said, if the committee were interested, we see less risk in extending a moratorium and giving enough time for a robust regulatory structure to be built in place around this, similar to what we see with other financial products, and certainly financial products that are readily available to the average consumer. There are some good suggestions in the DFR report. We support a lot of those. We think there's a lot more room to protect consumers beyond what the commissioner recommends. Happy to go a little bit more into detail than that if the committee would like. Happy to answer other questions as well.
Go ahead. I have a comment on a direction to go. Since there might be some risk to outright banning, I pivot back to my original comment, which is it's a financial thing that maybe belongs in a brick and mortar bank if people want to do that. Not banning.
I already heard the banks there have no interest.
Well, no,
Yeah,
but a bank might. It's not banning.
There's a bill that's been drafted. So maybe the next step is for us to take a look at that bill and see if that's a direction that we're interested in going. And maybe we need to work with the AG's office and DFR in it maybe there's changes that need to be made, and we can work with the industry as well. Is that if people were interested in going? Not hearing no.
Right. So DFR had a particular set of recommendations, I think, if I remember the report correctly. Were the AG's And I think you mentioned some possibility of additional issues that could be addressed. That might be helpful to see those other issues that you recommend.
Certainly, not knowing what the draft bill is, Chair, we're happy to help support and review if it's an outright prohibition. And we're happy.
The bill that's there right now is not a prohibition. That things up a lot. But whether or not it has all the features that DFR is looking for, not sure. So maybe there is anyone here that would like to work with Maria, work with DFR.
Yeah, we'll take that one on.
I mind working with Tony on this.
Okay. We haven't introduced it yet. So maybe Herb and Tony can work with Maria. I'll give you, I think, yeah, no one signed on to it, but you can work with them on that. And see what we can come up with. We want to talk with Aaron at Ethan. Also, work with Todd, but communicate with Heather Scholdice as well. She's representing one of the industry players, CoinFlip, who posed a draft. And so maybe we can look at that and perhaps enhance it more. So you can touch base with Heather as well and see what we can do. And if it becomes, really big, gonna take us a while, then we can always talk with Senate Finance to extend the sunset for one more year if we need to. That's an approach. If everybody's in agreement, sound like a plan?
Yes, sir.
Okay, that's the way we'll go. Perfect. Thank you. Yeah. We have draft amendment.
You said there was a virtual currency bill. I thought, did I finish that? I remember finishing that, but I didn't. Did I?
No. But that's, what you have now is a place to start.
Right. No, there's some.
We'll have everybody sit down
Yeah.
and we can come to a consensus on how to regulate and what it looks like. If we can do that quickly, then we can move it along. And it's already drafted, so we had till 21st to introduce it.
No pressure.
I'm hoping this bill will be able to get going. I know Jen Carby is just finished the draft and she's circulating it on the healthcare piece, the Medicare, Medigap piece. So she hasn't gotten the okay from everybody yet. So we'll take a look at that another time. We'll schedule Jen to come in. Maria, thanks again.
Okay, Maria Royal with Legislative Council. So this is a draft committee amendment to H 137. It's a strike all amendment. So everything has been incorporated into this amendment so far. And all of the substantive changes are highlighted in yellow. So I'm just going to start scrolling through for the first change, substantive change. And this is in section 4. This concerns unfair discrimination with respect to affordable housing in the insurance industry. And DFR suggested that the statute go into a different chapter. So the first change is just moving it, not a substantive change. And then in addition, there was, DFR also raised a concern that there were some insurers that specifically provide insurance to this market. And I think the suggestion was to eliminate the language that said that insurers should not inquire about affordable housing, income, et cetera. so that it's just shall not cancel, refuse to offer, and that might solve that problem, so that the industry will continue to function. And then there were a number of places throughout, this is the issue about, when you don't have officers, specific officers in, for example, a limited liability company that the governing board authorizes individuals, that whole issue, which appears throughout the bill. So I think you wanted to clarify that it's only in the case of limited liability companies. And after testimony discussion last week, DFR also suggested that you include reciprocal insurers because they too do not have traditional boards of directors. So, and then just clarifying that it's, you know, two individuals. I think there are a couple of places that didn't say how many, so just cleaning up some of the language. So that change, basically, I think there are 6 or 7 instances, was made throughout. Again, LLCs and reciprocal insurers. So I'm not gonna pause on any of those in particular unless you would like me to. So I think then what we get to are the new sections that have been added to the bill. Apologize for the scrolling. I just want to make sure I didn't miss anything. Yes. Okay. So section 15 of the bill. This is proposed language which you have not seen before. And this is an exemption for the money services license, money transmission license, payroll processing companies in particular. And we'll just read through the proposal. These are entities that would not be required to go through all of the licensing requirements. So a person that performs payroll calculations, prepares payroll instructions, prepares and files state or federal income withholding tax reports and unemployment insurance compensation reports, or provides other payroll-related services, but that does not engage in the business of payroll processing services or otherwise engage in the business of money transmission in this state, or other acts requiring a license under the chapter, would be exempt. Again, it's a whole list of exemptions, and these are new ones. So it would include a person that does not provide payroll processing services to any employer that has its principal place of business in Vermont and does not otherwise engage in money transmission. A person that provides payroll processing to 25 or fewer employers that have their principal place of business in Vermont. Provides payroll processing services to 500 or fewer employers, regardless of where the headquarters is located of the employer, either inside or outside Vermont. Or provides payroll processing services involving transmission to less than 300 Vermont resident employees, again, regardless of where the employer's principal place of business is located. And additionally, has not been convicted of or pled guilty or nolo contendere to a felony in a domestic, foreign, or military court. No key individual person in control of such person. Person generally means company or corporation. It's broad definition under Title I. Has been convicted of or pled guilty to a felony in a domestic, foreign, or military court. Has never had a financial services license or professional license revoked in any jurisdiction, and no key individual or person in control of such person has ever had a financial services license or professional license revoked in any jurisdiction. With the exception that if there's a formal vacation of such revocation, that's not deemed a revocation under this subdivision. Does not otherwise engage in the business of money transmission in Vermont or other acts requiring a license. receives and holds all money or monetary value received for transmission exclusively in segregated accounts with federally insured financial institutions or credit unions, for the benefit of its employer customers or applicable governmental authorities, such that the funds in such accounts are not subject to claims or liens of its creditors, or deposit accounts at federally insured financial institutions or credit unions that are both titled in the name and tax identification number of the financial institution or credit union and for the benefit of the person's customers. Sorry, that was really technical. And, but you can hear more about from the sponsors of the proposal. And then in addition, new language, this is, you have not seen before, section 16. This concerns permitted charges. This is a section of law that has to do with the interest rates and charges that financial institutions and lenders can make. So except for the interest as provided in this chapter, a lender shall make no charges against a borrower for the use or forbearance of money other than, and then again, in statute, there's a list of 6 other exceptions, or excuse me, there are 8 exceptions. So this is just adding a 9th exception on line 13. Discount points at the request of the borrower for the purpose of reducing and which in fact result in a bona fide reduction of the interest rate or time price differential applicable to the loan. And then that subsection B is basically the same. It's just using non-gendered language, so not a substantive change to the law. So again, you'll hear more about the policy support for that proposal. And then I believe you wanted to change the effective date to July 1st instead of on passage. So that's a review of everything that's substantively different in this draft from the language itself.
Questions on the language from Maria? Maria, thank you. I think probably before we hear from the department, it may be good for us to actually hear from proponents of some of those changes. Chris, did you want to?
Sure. Morning, Mr. Chair. My name is Chris Rice. I'm a lawyer and lobbyist here in Montpelier with MMR here this morning on behalf of the Independent Payroll Providers Association. We've got Robin, I hope, is online, and she'll go into this in more detail with you, but just want to set the stage a little bit. Last year, this committee did a lot of work on the DFR bill that included new requirements for payroll processors within the money transmitter law. That was a set of new requirements that while we think it's appropriate for larger payroll processors, it's our concern that it didn't strike the right balance for some of the smaller local payroll processors here in Vermont. We reached out to the department, and as typically the case, anytime you raise a concern with them, they were willing to sit down and work with us over the summer and fall to develop a proposal that I think strikes the right balance for those small independent payroll processors here in Vermont, and takes into account the various requirements that they already have in place through their banks and under federal law. So with that, just thank the committee for your willingness to look at this, give us time, and introduce Robin to you, who can talk to you in more detail about the proposal and the policy rationale behind it. Thank you.
Thank you, Chris, and good morning, everyone. I'm sorry that I could not be there with you in person today. I am Robin Imbrogno, and I'm here on behalf of the payroll group TPG and the Independent Payroll Providers Association, of which I am members of both. Collectively, our groups represent approximately 300 payroll processors around the United States. Our members consist of small businesses around the country, including here in Vermont. In Vermont, there are approximately 250 firms that are in the business of both accounting, tax preparation, bookkeeping, and payroll services. More than 200 of those have less than 20 employees. Though I've only been in Vermont for 25 years, which I think considers me still a flatlander, I do know that small businesses like working with small businesses. Small payroll companies provide an essential service to local Vermont businesses. In addition to payroll processing and filing taxes, payroll processors work with businesses to provide an advisory service. We work with businesses on things like wage and hour laws, provide insight into sick leave, FMLA laws, changing issues around things like COVID, when we were going through all of the nuances of the Payroll Protection Act, when all of the nuances came out around FUTA tax credits and how to get employees paid under the changes that were coming out to sick leave law under the Payroll Protection Act, and specifically around the first Coronavirus Response Act. It was our industry that banded together to help educate small businesses on how to do that. Often we found ourselves in a situation where we were working nights and weekends while the large national companies would close their doors and they would leave at 5 o'clock, and we were providing advice to the Country Girl Diner in town, or the Weathersfield Inn, or the mom and pop restaurants that were around the corner. I was in a unique situation myself because the technology license that I hold wouldn't allow me to provide payroll service to companies in Vermont. So that territory was excluded to me. But because they were our neighbors, I with my husband worked to help educate around the Restaurant Revitalization Fund and the Shuttered Venue Grant to help those people who didn't know what to do around loan forgiveness and PPP and how to gather those numbers. Because if they were a big blue client or a big red client, they weren't getting that kind of advice and counsel. So those small business payroll providers give much more to your small business associates, if you will, than many of the large national firms. If HB 659 stayed the way that it did, it would make it impossible for small payroll providers to continue in their operation and service in Vermont the way that they are. The licensing requirements alone would become and continue to become cost prohibitive for us to stay in business the way that we are. Compliance today, and I can just talk to how it looks for me. But for me, our bank requires currently for us quarterly to report a Know Your Customer list. So every quarter, we just reported it now for first quarter, all of our clients. So we have to report every single client that we have to our bank, and we have to tell them who those clients are and what industry they're in. In addition, we have to go through what's called a notch audit. So a list of all of the files that we send through the banking system gets sent. An outside auditor comes in, the results of that audit go to our bank. And what they look for is to make sure that those files are sent and that they're sent according to the regulations that are sent forth under the National Automated Clearinghouse rules, so that the files are maintained properly. In addition, our bank requires a SOC audit annually. And those SOC audits, the Notch audit, those together cost tens of thousands of dollars to our business every year. In addition, I have to provide our bank annually with a personal financial statement. They know where every dollar that I have is, where it can be found, and if there's a change year over year, why there's a change and where it might be situated. In addition, we have to run an OFAC check, which is to make sure that none of our clients are laundering money, and that the Office of Foreign Assets and Control has been monitored for all of our clients, and that all of our clients are within a certain category, if you will, so that because we have to make sure that no one is in a protected or prohibited group. Otherwise, our bank will not do business with us. So those and credit checks are provided annually, and every credit check that we run costs around $50 a credit check. And then they come and they talk to us every year, and then we have to go and talk to them every year. And those are just some of the terms and conditions that we have to go through to do business. And then the IRS requires us to notify our clients that they can, quote unquote, look behind us. So a client signs an 8655, which means that they can go and check to make sure that their withholding is properly withheld, and that they can get online to make sure that their funds are being withheld at any point in time. So in addition to all of that, what you just saw in terms of the modifications for specifically for small payroll companies, is those restrictions for these small payroll companies will also make sure that small, both in terms of scope and size, will also have segregated funds. So the funds that payroll companies around our size will both be limited in size and scope, and those funds will need to be segregated from other clients, as well as be segregated from our operating funds. So basically what I'm saying is that your Department of Finance has made sure that your small businesses will still continue to be safe, and that they will be protected, as well as your small businesses will also continue to be well served by the smaller businesses that have continued to make sure that they're well served, so that small businesses can still be served by small businesses in Vermont. And we are very grateful that the department has worked with us to create an environment where we can still continue to work together. So with that as sort of a backdrop, what questions can I answer for all of you?
Any questions? Emily?
I know you just went over all of the work that you all do, which is quite substantial. I was curious about, in the original bill, how much of a burden would it be to comply with licensure?
So the MTL licensing would, for most small businesses, probably require them to leave the business. And the models that we've run for the businesses of size and scope that have been carved out, they probably would not be able to remain profitable. Not only is there a cost to the license itself, which isn't as significant, but there's a cost of financial statements, certified financial statements, which is over and above what we've just talked about. In addition, and probably one of the most challenging pieces for us is that we have no control over the movement of people inside and outside the state. So if someone moves, if we have a client that changes from one state to another, as an example, if we have an employee that decides to leave the state of Vermont and go live in another state, and that state happens to be a covered MTL state, and we have no control over the fact that they are now a remote worker, we may not know in advance. And if we don't have a license in that state, we're automatically not compliant. So if a state, in this case, if you didn't have an exemption and we were working in Vermont, we would automatically not be compliant and have no control over that whatsoever.
Okay, thank you.
Thank you.
So thank you. I appreciate the explanations. I'm curious as to the limitations on the number of employers, and not the number of employees that those employers have. And I'm curious how that plays. Why, right? Why we're not looking at, because when I think of a small business, I think of providing not a lot of employees. So I'm just curious why that language is excluded.
We didn't pick the numbers themselves. Truly, we let the department pick the numbers, and they presented the numbers to us. Originally, I had looked at all of the numbers in the state at demographics and census numbers. And candidly, when the department came to us with those numbers, having looked at the census numbers for 23 and going backwards, they made sense to me, knowing the size of small businesses within the state. It worked from my perspective, just knowing, what the average size of a business is within the state of Vermont and comparing it to other businesses within the country. So it just made sense. I think going about it in other ways may have been more challenging, trying to figure out either revenue size or paycheck size, I think would get even more complicated because you never know if somebody is going to get a bonus or, take a smaller check or a large check. You don't know. So it sort of made sense to us. And there had to be a cutoff somewhere. So.
Thank you. That's helpful.
Part of, I'm a little confused as well, and following up on Representative Granny's question, because it looks like when you look at subdivision 20, maybe this is a question for Maria too. You look at subdivision 20 and you have 3 different categories of exemptions. And I'm not sure whether those are alternatives
And
or
there's an and.
together. One of them talks about employees, the other 2 talk about employers. So just a little confusion on my part about what's intended there and the policy around, those different categories.
Sure. They are ends. So they're together. They're not ors. They are inclusive. So they are meant to all be together. So it really is restrictive. It is more restrictive, if you will. So it's really limiting to small payroll processors.
Through G. It's A through G, and the and is at F. So it's all in.
Okay. Well, I'll have to read it again. I don't fully understand.
Other questions? I think that the language that was passed last year came from an NAIC model, if I remember right.
It was part of a model, that's correct. Yep.
They get
Right. From
wound up capturing it through small processes. Hopefully unintentionally. And think what we're trying to accomplish here is to make sure that these small payroll companies can continue to work in Vermont. Other questions? Great, Robin, thank you. Chris, thanks.
Thank you.
Thank you.
Well, great.
Before we move on to the next one, let's hear from Aaron, from the department. And we'll move to the next piece of the amendment.
Okay, excellent. Good morning, everyone.
Good morning.
Sorry I can't be there in person. I am at a conference in Atlanta. So yeah, just as Robin, she did explain that we were presented sort of with this issue after the fact of passing the Money Transmitter Model Act last session. They did come to us before the bill was passed, sort of late in the session, to try and work on this de minimis exception, but we weren't able to get it across the finish line at that point. But we did promise that we would work on it for the following session, and that's why we find ourselves here. And just to clarify that the points about item number 20, the intention is that in order to meet the exemption within item number 20, you would need to meet all of those provisions as well. So it is something that is considered to be really honing in and identifying who those small payroll providers are, and exempting only those specifically. Happy to answer any other questions if you have them too.
So Aaron, I'm not sure how much data you have with you. Can you hear me? You want me to be louder?
No, I can hear you great.
Okay, so my question is, how many businesses are excluded and how many businesses still have the new requirements on them? So how many businesses does this exception?
Yeah, in terms of payroll processors, I don't know that detail. To be honest, the number of licensees that we've gotten since the passage of the bill last year has probably not been that excessive. So I think there's been a slow rollout and identification of this new licensing requirement to begin with. Those items within A, B, and C were just sort of shots in the dark as to the size of an employer or how much is too big for the payroll provider. Ultimately, we're not concerned with their provision of payroll services. We're concerned with the taking of an employer's money and the way they direct it to the employees. Should anything happen with those funds, we have the concern. So that's ultimately what's at the root of the licensure requirement. We fully recognize that the de minimis exception is needed, especially in a small rural state like Vermont.
Great, thank you. That's really helpful.
Thank you.
Sure. Next question.
I still do, but I'm gonna back later. I don't understand the A, B, and C.
Okay.
I can meet with anyone after too if you need help.
Okay. Thank you, Aaron. Is it safe to say that these small payroll processors are not operating now in the state because of the requirements that we passed last year?
It's probably safe to say that if they are, they may not even be aware of this change in the law to be aware that they would have needed this license. And again, it's not our intention to be restrictive in any way.
Right. I'm just wondering, if they're, I mean, based on what we passed last year, of course, it went to Ways and Means and they kind of bank the amount of fees that are coming in from licensure. Do you anticipate that this will make any changes to what was anticipated for the fees coming in?
I really don't. The banking division is sort of a little bit of an island to itself. We're really designed to pay for ourselves and not really contribute much to the general fund anyway. Yeah. So we might have to reduce other fees that we charge banks if we have too much revenue from one other source.
Okay. Other questions for Aaron? So far with this amendment? Except for her.
I still don't get A, B, and C.
You can, yeah, you can talk with Chris and Maria after, and Aaron's available too. Okay, great. Aaron, thank you. Just don't go anywhere. We're gonna take on the other piece now and then we'll want, so, just to be sure, the language that's in this amendment now is supported by the department.
That's correct. That's the language that we worked on over the summer and fall and agreed on with Robin and Chris.
Okay, great. Thank you.
You're welcome.
Okay. Nick, did you want to set anything up?
I think David's gonna do the testimony. I'm happy to sit here and I'll introduce myself. Nick Sherman, Leonine Public Affairs. Nice to see everybody here on behalf of Rocket Mortgage. And David Pfeiffer should be on the,
He's right behind you.
so I'm gonna let him
Morning.
speak to the
Morning.
issue.
Okay. David, good morning.
Good morning. My name is David Pfeiffer. I am here on behalf of Rocket Mortgage. Thank you to the chair, members of the committee, and the staff for having me today, as well as for accommodating me remotely. Of course, the weather I was worried about ended up missing me completely, so you're very welcome to all my neighbors in southern New England. So Rocket Mortgage, beyond our Super Bowl ad this week, we are a national lender focused on enabling homeownership, especially first-time homeownership. It is our jam. It is what we care about. It's what we're passionate about. And we do that by working with large national investors, Fannie Mae, Freddie Mac, the Veterans Administration, the FHA, to make sure that mortgage dollars and products are available to all of our communities. We lend clients our own money. We package up those loans and we securitize them to these investors so then we can take that money, lend it back out again, and keep a steady flow of capital going. And one of the things that we're really proud of that does set us apart is that we buy the servicing rights for virtually all of our loans, so that even after we sell a loan, a client still works with us through the entire course of the loan, especially when natural disasters, major life-changing events, or global pandemics hit. So we can work closely with them to make sure that they're set up to be successful to keep their home. That is the single largest investment almost any of us will ever make. So on the policy before you for consideration, I believe it's section 16. As we all know, mortgage rates have gotten high and they've stayed high. Typically, when a family welcomes that second child or the fifth dog or find themselves needing more office space, you would see them sell their home, move to something larger. But in this high rate and high cost environment, we're instead seeing our clients choose to take out a home equity loan, a closed-end second mortgage, to use the equity they've built in their home and fund expansions or improvements. These are loans ranging from about 10 to 30 years, and depending on the term the client wants. In a first mortgage in Vermont, as well as every other state, and then for second mortgages in 47 states, Vermont being one of 3 states that doesn't allow this, a buyer has the option to buy down their rate. That is to say, they can spend an extra fee up front to pay a lower interest rate over the course of the loan, and it results in a lower monthly payment. From a lender perspective, that fee offsets what we would lose securitizing a lower interest loan on the back end. So it comes out to about a wash for us. But what does change is that the client can now pay a lower monthly payment if they choose to do so. Every family has their own financial strategy, lower monthly payment. They want to minimize upfront fees. They want to pay less over the course of the loan. We all tackle things different. This gives them one more option. The language in front of you would quite simply allow Vermonters to buy down their rate if they choose to do so on second mortgages. That is the long and short of it. I really appreciate your time and consideration. Happy to answer any questions.
Questions?
Just for clarification, thank you so much for being here. So Vermont is currently allowing this on first mortgages, and this is only for second mortgages.
That is correct.
Questions? How, it's just for my curiosity, how does this differ than someone just putting that money down on the principal?
Oh, that's a great question. So, right, when you do your first mortgage, you have a down payment that you can play with up or down. Some clients might choose to, instead of spending that money up front, just choose to pay ahead on their principal to pay it down. This would actually lower the interest rate on the loan, so their minimum monthly payment has now been lowered.
If you have less money up front, you can buy your points down. Rather than if you had more money, it would make more sense to have a smaller loan amount. I think that's.
So on a second mortgage, since there's no down payment, what you take out is the entirety of the loan. So you might choose to just take out less money then.
Right.
And then where the client has the option to modify is on the interest rate.
No, I mean, we're talking about second mortgages. We're not talking about moving, right? We're talking about refinancing and taking money out. So this is
So this
less
would be-
about. Go ahead.
Oh, I apologize.
No, I mean, this is less about being able to move into a different location and more about being able to modify the home that you're currently in.
That is correct. Taking out equity that you have in the house to then add on that extra bedroom, the office. When my wife and I did it, our yard was a full Jurassic Park situation. Literally lost our 150-pound Saint Bernard out in there because it was out of control. So that's what we used it for. So this is about folks who are staying in their home. They want to keep their principal, their first mortgage rate probably under 4%. Almost definitely under 6%. That's where the majority of Americans are. They don't want to mess with that, so they don't want to do a full refinance. Instead, they're going to take out a second mortgage with the equity they already have paid in, and use that to fund the changes or improvements that they see fit.
And that's the market that we're in right now. Okay.
Any other
That is,
questions?
we've seen a huge demand from our clients on this, rather than, unfortunately, there just aren't homes for them to move to. So this has been a huge demand, an uptick we've seen.
Other question? Okay, David, thank you. Thank you.
Thank you all.
So Aaron, like to weigh in? Aaron, would you like to weigh in? There he is.
Sorry about that, everyone. I apologize. My system crashed. Yeah, we do technology, right? So yeah, I think I can say that Rocket, through their representation, came to us about this change, and we do support it. In our view, this is something a borrower could elect. You already would have this right to elect to buy down your interest rate in a first mortgage transaction. Due to some decisions made in the 80s and earlier, it hasn't been permitted in these subordinate lien or second mortgage situations. But we do support this change, correct?
Questions for Aaron?
What was the nature of some of those concerns that led to it not being allowed in a second mortgage in the first place?
It was really the nature of the concerns was what led to the creation of this statute in general. And again, this is back in the 80s. So 9 VSA 42 was designed to really hone in as to what the permitted charges in these transactions were. I don't know why they were explicit about not allowing you to buy down the interest rate at that point. I was very young. Regardless, though, I do think this is, yes, you're welcome.
So Aaron, when we allow for buying down rates, do we have limitations on how much money the company can make on that when they allow somebody to buy down the rate? Is there any, you know what I mean? Is that, do we limit that at all in the state, or do we just allow the market to, you know, people have to shop around for the best rate they can get.
Yeah, we allow the market to set that. So they would have to say, this is what the interest rate is. If you'd like to pay 1% or however they define the discount point at that point to get a lower rate, the consumer would be making that informed choice at that moment when they took out the loan. Mortgage pricing is somewhat dynamic. The rates change daily, so it's it would be hard to sort of limit that, I think.
Any other questions for Aaron? Everybody good with including this in the amendment as well? Okay. All right, Aaron, thank you very much.
Thank you, everyone.
I think at this point, what we have left so far is some of the changes that the department had asked for. Maybe Emily and Sandy. We can just, we'd like to join us.
And I think Sandy might have stayed on as well. Emily Brown, Department of Financial Regulation. I'm here to support the amendments to the bill that Maria introduced earlier. The first being the change to the location of the language prohibiting discrimination against affordable housing to the unfair trade practices. As I mentioned before, that makes sure that the language not only applies to admitted insurers, but also the surplus lines market. And again, we believe there's language in our statute currently which prohibits unfair trade practices, which we believe this is one of those. It's just adding clarifying language that speaks to that intent. So currently, we believe this does apply to the surplus lines market. So it's not a substantial change in the department's opinion. It's just adding clarification. We also support the change to the effective date that was made to a date certain. That was another ask we had discussed. And then as well as the elimination of the prohibition on inquiring about affordable housing. And I'm happy to take any questions. Stephen.
In putting that requirement around unfair discrimination in section 4724, do you, as opposed to a standalone section, do you have companies that push back against you at times that, well, only 5 complaints, that's not a practice, and therefore you can't enforce that particular provision? What's the upshot of that?
Yeah.
That kind of pushback, because having a separate section says you can't do this.
Mm-hmm.
Over here, it says you have to show a practice. I understand that's fine. But do you have any pushback around, that issue of practice?
Are you asking about the statutory construction of where it's located within 4724 instead of a standalone section?
And I don't have any problem with that, but I'm just worried. I'm wondering whether you have any pushback from companies that is, 5 complaints isn't enough to establish practice.
So I would say with housing right now, we just heard from another company about how housing affordability and access right now is a major issue, not just in Vermont, nationally. So I do feel like in this instance, there is a housing crisis in our state, and doing anything we can to eliminate barriers to people's, having access to affordable housing is really important. So I agree to your point. We normally don't speak to specific underwriting practices in our statute and our unfair trade practices. But in this instance, I think we felt really strongly that this was important to clarify. I don't have an issue with it being embedded in unfair trade practices. And I would say, I think right now, we're not seeing a widespread market issue, but this is put in place to then prevent potentially, depending on where the housing situation goes, any unforeseen issues in the future as well. So I view it as being proactive, and making sure that it's clear what the department's expectation is in regard to coverage of this type of liability.
Other questions? Sandy, is there anything that you want to add?
No, Emily did a great job talking about, this is one of those areas that we think being proactive is good, for Vermont and the marketplace. And, with respect to other amendments in the bill, in particular, Emily spoke to the effective date, and I support that. I also support the amendments to, in the captive statute, related to, non-officers or, adding for reciprocals and limited liability companies. That language, I think, helps to clarify, where an entity in those circumstances do not operate with officers.
Great, thank you. John?
Because some of the housing related elements are sort of tied to the sort of sense of urgency that we feel, is it your position that suppose that problem is resolved, this is still best practice no matter what?
Yes, I agree with that.
Okay.
Yep,
Thank you.
yep.
Any other comments or questions on any parts of this bill? All right, thank you.
Thank you so much.
Thank you.
So committee, I think we have heard, is there anybody in the room that wanted to testify? I think we've heard from everyone on this. We need to wait for our committee assistant to come back before we can go off. But Maria, you're here. Is there any other language that we're waiting for, or is this the final?
I think there was the language, VFR, Jen Harvey.
That's right.
Sarah Teachout, they have language, it's been circulating. Not sure if it's finalized, but that's the only other.
Can you just give us a tiny overview on what that
But I
is?
don't know anything
Okay.
about it. Jen Harvey's handling it. It has to do with, Medigap coverage, I think. It's not an area I'm familiar with.
She's logged out.
So put on this.
Oh, you can do it right there? Okay. Okay, so then committee, we are done for the morning. We are back at 1:00 after lunch for a walkthrough on a proposal from the Secretary of State's Office, Director of Business Services. So we can have an early lunch. The chair said that we are going to bank the time. So just putting that on the radar. But enjoy the time now. There is a press conference for outdoor recreation right now, which is where the chair is. He's speaking there. If you wanted to go and listen to that, or if you have other things to attend to,